Former Kansas City Fed President Thomas Hoenig joins us this morning. Thomas, it's great to have you back. I'm curious if you've been listening to the conversation and what you think will be most interesting today, the dots and preserving optionality, or some kind of color or framing from the chair himself?
Well, I think that the dots will be important only in a sense that it describes the mood of the FOMC, because there's some new members on there. People will be looking for how they're thinking about it, because there is differences within the some wanting to hold more permanently, others wanting to get the rate higher to get the inflation down. And given the amount of I'd say, strength in the economy that surprised some because of the tremendous fiscal stimulus that was in the economy, that's just now wearing out. So they're gonna be talking generally about the future, and as you said, they don't know. So again, I agree with you. They're going to be talking about, we're going to be very diligent. We're going to look at this very carefully. We're going to watch the inflation numbers, and then we'll decide later, is how I see it coming around on the conversation today.
This whole cycle has been about core, and we've seen a number of takes lately that oil will have limited impact, at least pass through to the core. Do you agree with that?
Well, not necessarily, because if the energy stays high, not just higher inflation, but if it stays high, it's going to further affect transportation costs and related costs to that, which is already pretty high inflation. That's going to affect other goods in terms of the cost of delivering those goods, and consumers having to pay higher prices for that. So that's going to put upward pressure, I think, on inflation, unless that energy comes down very quickly. And I don't see that happening at the moment. So I think inflation will stay more elevated than some expect, and that's what the FOMC is also concerned about. Now they're going to explain themselves by saying the core has come down, but they're also going to say we want to watch it, as you described earlier in this conversation.
Yeah, I mean, it definitely will filter into airfares and other parts of the economy and parts of inflation that have remained sticky. My question is on the consumer, and we've seen the consumer hold up relatively well, which maybe has kept inflation hot. But we are facing the resumption of student loan payments. Excess savings are really starting to be drawn down here. Do you expect a big change toward the end of the year with the consumer and therefore the overall economy and the inflation story?
I think that the consumer is going to be backing off as we go forward, not just because of the student loans, but because the economy itself is slowing, and they're seeing that. So you get more conservative when that happens. So that's what I expect. I also expect upward pressure on rates. I think quantitative tightening isn't discussed enough, but as the excess liquidity runs off and quantitative tightening remains in place, that's going to put upward pressure on interest rates. That's going to further, I think, discourage the consumer and some businesses. And so I think the risk of a recession is high, and the FOMC knows it. That's why they're going to be pretty coy in their conversation, in their statement today. And I think the chairman will be pretty coy in his press conference.
Thomas, appreciated that very much. We'll see what happens this afternoon. Hopefully get your take on the other side. See you soon.
Thank you.